She's a whole bunch of good energy. We just celebrated her birthday on Saturday, and boy, she knows how to dance and party. So, with that being said, I want to bring in none other than my good friend. I think I can now call you good friend, right? My good friend, the
Please.
one and the only Miss Angie Tony, tax strategist extraordinaire. Welcome.
Well, thank you for having me.
I
I don't know if you're a little frozen or I'm a little frozen.
You were a little bit frozen, but maybe there's a little bit of delay because we're using up a whole lot of bandwidth right now.
Yes.
So welcome to Business
And then we're in this
Insights with
data set.
Eunice. Is she frozen on your side?
Yeah, I think I lost her a little bit.
Frozen. This is-
Oh, all right. We're gonna get this working
I see you
right.
just actually
So,
well.
We're good.
Okay.
So Angie, I could tell the world about you and what it is that you do, but you would probably do a far better introduction for yourself. I could just tell them that you're a cool, cool Jamaican who makes really good food and you like to dance the shabaranks and all of them. But go ahead. Why don't you tell the world about who you are so that they can know you?
I will. I will. Thank you for having me, Lee. I'm Angie Tony. So I've been a CPA for 30 years. I have to start saying, right, getting up there. But I had a corporate background in corporate auditing, right, where fight white collar crime. I was a certified fraud examiner. And then I
Hmm.
just said, well, I have this bright idea. I want to be an entrepreneur and small business owner, as a lot of people have. And I went full time in 2019 in my own practice. And so I
Hmm.
specialize in what we call tax representation, which is people who already have tax issues. So my worst client owes over $1 million to IRS. So I'm fighting and negotiating. Not only do I like fighting the IRS, I like winning. So that's what I do on that side. And I also plan and advise on minimizing liability for those who feel they're overpaying the IRS as well, and the state for
So,
that.
so you
mm,
also work on getting people out of the trouble that they have gotten themselves into. But once you have saved the day, you can then advise them on how they can minimize how much they're sending over to the IRS at the same time.
Yes, because that's what they were trying to do in the first place before they got themselves into trouble. And yes, so you have to be proactive. Don't tell me no, tell me how. So there's a way.
Don't tell me no, tell me how.
Yes.
There's a way. And
Yes.
there's a way to do it where you don't have to wind up with an orange jumpsuit similar to Wesley Snipes.
And not just the taxpayer, but the tax pro as well, because we could get into trouble too. But yes, there's no need to lie, cheat, or steal. Plenty of legal ways.
No, one of the
I
things that I like to talk about is I read a book by Tom Wheelwright called Tax Free Wealth. And in that book, Tom actually spoke to the fact that the tax code at that time is about 6,000 pages. 200, which are the schedules that tell you how much you're going to be paid, is the tax brackets, right? But
Right.
he said that you need to work with tax professionals who understand the other 5,800 pages because that's where the sweet spots are. The government is incentivizing certain actions to be taken. And I find too often when you work with a traditional CPA, that person is going to focus on that first 200 pages. The
Yeah.
real honey is inside of those 5,800, because if you do what the government is incentivizing you to do, they're going to ask you to do more of it. So, can you double click into what you see with a traditional CPA and where you bring additional advantages and skills to the table?
Right. And let's first give everybody credit because there's nothing wrong with being traditional in the sense that we need volume preparers. Prepare, do the right thing, put the numbers in the column. But on the other side, we have a separate service, which a lot of people, then say, oh, did I have to pay for that? You don't recognize that that is something that costs money to be proactive and understanding those codes. So on that side, that's somebody looking further. Well, instead of just complying, let's be proactive and seeing what else we can do to minimize the taxes. So a person who is a certified tax strategist, that's somebody who is studied, going to courses and taking further certifications to understand the code. By the way, the same codes afforded to the rich and the wealthy and the famous are afforded to us. We're all citizens or residents paying that US tax. We can use the same codes.
We must learn how to use the same codes,
Correct.
right? Because I remember probably about, is it 10 years that Elon Musk decided that he was going to buy Twitter and name it X?
Has it been 10 years already? I would believe that. Yes.
But one of the things that I found most astonishing about what he did is he used his Twitter stock as an asset to basically go and get loans in order to complete the purchase for the equity that he was bringing into the purchase, right? And there were several reasons why I thought about what he did. If he had gone out and liquidated those assets, having sold those Twitter shares, he would have been in the realm of capital gains.
Boom. Huge. Correct.
And the best that you're going to get with capital gains is 15%. Tell me if I'm incorrect about that. 15 to
Or
20%.
or in the higher tax brackets, 20%.
So 20% when you have held it for over a year, which we would
So
have,
it's really the bracket on the rate, but it's either short term or long-term capital gains. So yes, but the rate is based on your bracket, right? If you earn over a certain amount, you're at 20%.
got it.
Mm.
And in this per instance, because so he was even below 15% because at that point in time, interest rates were in the twos and the threes,
Right. So
right?
now you have to look at things differently. Ordinary income tax rates, that's different from capital gain rates.
Yes.
So see, property tax rates, sales tax rates, they're all different kinds of rates. But guess what? The Bezoses and the Musks and these guys know about, capital gains rates and how they're much lower than the rates that they probably pay.
But what I found most
Mm.
remarkable about that is by taking out a loan and
Mhm.
getting it to be below 10%, you were even in a better position than if you had liquidated those assets.
But we can't get people to understand that loans are not necessarily a bad thing, right? People just hear debt and all of it is, oh, no, I don't want to owe anybody. And then the interest rate and so on, but they're not looking at it like a tool, like the way real business owners and smart investors know how to view them.
So
Mm.
double click into that just a little bit. Tell me how you, I'm going to use your pixie dust.
It's so exciting.
Tell me how you advise your clients to use their assets so that they could not only continue to stabilize their business, but also so how they could actually grow their businesses.
Right. So we're all used to, let's talk on the individual side. Hey, I'm gonna take out a loan. We got the dreaded social security number. We're gonna look at our FICO score, get a hit, that kind of thing. And then now we've encumbered ourselves and we can only do so much as an individual. When on the business side, I always try to tell my clients, leverage assets. We're looking at ROI. Granted, there's a rate, an interest rate that we have to pay out. But wouldn't it be great if we get more in than we pay out? That's leveraging. And that's why we have to understand. And guess what? We're building up the credit history under the EIN, the company number. And loans are what? Not taxable. So we get capital infusion, right? And to do things to hopefully smartly invest so we get a rate of return better than what we're paying out.
And I just
That's
wanted
good.
to double
That's
click
good.
on the fact that you said that there is no tax obligation that is going to be triggered when you are utilizing a loan, right?
Mm-hmm. Yes.
Versus having to liquidate any of your assets, which might then incur capital gains that come off with this. Um, Eunice is more of the expert than I am when it comes to utilizing life insurance policies as a secondary source of income for business owners. And you and I, in the conversation, it was a short conversation, but you were telling me that this is one of the biggest secrets that people don't actually take advantage of. So, can you double click and share with the audience how is it that people or business owners can leverage those insurance policies for cash flow purposes in their business?
Yes. So it's sad that a lot of times when they first heard of it, they had a bad apple or a bad experience with an agent who sold them a tool that they didn't know how to use because all the agent was thinking about was commission. And so a lot of people got turned off, if you will, by insurance as a scam, as a thing or whatever, but they don't look at it as another product. Listen, we have all these different products and structures, and that they're pros and cons, but we need somebody educated, a professional educated to show you how to use the product when, right? Example, life insurance. Right away, permanent life insurance. So we have two types, term and permanent on life insurance. Term, 10, 20 years, 30 years. You pay the premium the same, but then guess what? It ends. If you don't die, you lose. Okay. If you don't die, you paid the insurance company all this money for all these years and you lose because there's no benefit, right? Sometimes they give you your premium back, big deal. It didn't grow any, right? It's as if it sat in the bank and then probably you lost from inflation anyway. The permanent insurance is either whole life or the indexed universal life policy that grows a cash value. Now, this is better. It's an asset. It's an asset that's growing, it's protecting you. It's multifaceted as an asset. There's a death benefit, yes, but it also has living benefits. So that if I'm living a long time, it's growing. Guess what we love? Compound interest. They're created to be overfunded, put extra money. They're not in the stock market. So if the market crashes, we're not going to lose. We save our principal. It keeps growing every month, a rate of interest based on how well the market does. That's why it's indexed, right? It's attached to us an index. And then as you go on, you say, oh, you know what? I want to expand my business. I want to add another product. Now I have my own bank. I can borrow from it and then I use it. Hopefully the ROI is better than I'm paying out. You don't even have to pay it back. You can elect to not pay it back. It comes out of the death benefit in case anything happens prematurely.
I like that conversation, Angie. And One of the questions that people have asked surrounding that, especially business owners, has been, well, we talk about how you can take a loan from your policy, right?
Mhm.
And they say, and we talk about how the tax benefits of that. But then people always sometimes come back and say, well, if I walk into a bank and get a loan, I also really don't pay any tax on it.
Correct, but guess what? You have to pay the bank back, right? And now it's
True.
under your Social Security if you got it. Let's say you're lucky enough to have an EIN, but now you're encumbered, right? And now it's going to look like and then also what else? What other features are you getting from it? It's really one and done, right? They give you, you're lucky if but what if you have another need? Right now you got to start over again, put in a new application. But if you're growing your own fund in your IUL, it's growing very nicely, it's protecting you, it has all critical illness, if you have a good policy, chronic illnesses, da 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 da, all these other features that are probably useful to you. And then it's also, people call it life insurance as a retirement plan. It's tax advantaged. It's growing tax free on top of it.
True. And like I think what you said at the beginning is that what we need is more of agents who are going to educate you on the pros and cons of each and to really do it with their clients in mind versus with the commission in mind. Because there are a lot of people who will say to you, I do have permanent life insurance, but I don't have that type of money that you guys are talking about. I'm looking to buy a car, but I only have like 200, 300. How can I do that? And you look at it, you look at that policy only to realize that it wasn't structured correctly. So because of that, that's why the cash value component hasn't really grown.
Exactly, because maybe they've been paying the minimum,
Yeah.
or or the face value isn't, because remember, if you overfund also, it can be a modified endowment contract and get a 50% penalty. So we don't want that. But yes, so let's use examples, real life. The earlier, is the best time to get insurance? When you're young and healthy, because it's cheaper, right? There's a cost of insurance piece of it that we have to be careful, right? As we get older, sadly, we may have high blood pressure, diabetes, and all of these things that go through underwriting. So our premium is going to be much higher than when we did it when we were younger. So as children are born, we should be getting policies. Sometimes it's $20, $25. But my children were 6 and 8 when I got them policies, and it was like $80 a month to kind of keep the policy. And that's overfunding the policy. That's not even the minimum. And then by the time they're like, my son is 18, it's paid for his first year because I had enough in there to pay. If I were smarter and knew then what I know now, I would have funded it even more.
Exactly.
Mhm.
Powerful
No,
stuff.
we have done the exact same thing. I think we got Simone her policy when she was about maybe 4 or 5,
Mhm.
and we got Jaden his policy at birth. And one of the things that I have been evangelizing both on this platform as well as to family members, because sometimes family members are harder to convince than absolute strangers, was do not buy that baby like a savings bond or something similar. The best thing that you can do is to purchase that baby life insurance policy, because
Mhm.
life insurance policies are based off of actuarial tables,
Nice.
and it's going to be the cheapest that you could purchase it at birth, right? It's only going to go up from there, right? But also you understand that it has to be it's capped. So since we got the policies straight for the children rather than as a rider to my wife's policy, right? We were able to get in at that level, but I think it maxed out at what, 150, $200,000.
Correct.
But the
Juvenile policy.
reason
Mhm.
what
Mhm.
I love about those policies is the fact that they our children will have those policies forever,
Forever.
Yeah.
forever, and it's going to be at that level. And
forever.
although my wife and I control the policy,
Hmm.
we control the policy and we can use the cash value component of those policies. Eventually, we're
Yeah,
going to turn over those policies to our children, and they will continue to be able to generate generational wealth.
exactly. When you know that they know what they're doing, when we're
Yeah.
sure they've been educated, they know what this product is. Yes, great time to hand it over.
No, what we're going to do is we're educating them now
Hmm.
as to, we read the Becoming Your Own Banker probably about 10 years ago. And to be honest with you, we went out and we got an insurance policy that wasn't building cash value.
Hmm.
It was a policy that was based off of a high premium for the death benefit.
Wow.
And we had to go through the personal example. We're always client number zero when it comes to the things that we evangelize in our business, right? So what we did is we re-engineered our policy. Eunice got the qualifications in order to be able to do it, and then she restructured our policies, and we went forward from there. But what we are trying to do here on this platform is evangelize to small business owners how, if you are a key person for that business, right? And what if something were to happen to you, you want the business to continue to go on as a going concern, but you also want to be able to have coverage for yourself and for your family
Mhm.
in case that instance happened. It's not money that you're throwing away similar to a term policy. It's money that it could be used as a strategic asset as you go forward there. So I
Mhm.
thank you for being an expert in sharing on that topic because Eunice and I have been yelling probably from the highest tree that we could find in the state of Virginia and telling people that this is a tool that you need to use, right?
Absolutely. Hmm.
And I would like to transition the conversation just a little bit to something that you were saying, because the focus here is on business owners. And you had mentioned, as a business owner, you have to be able to keep the business finances separated from the business, the personal finances,
Oh.
Correct. Hmm.
Mhm.
right? So on the personal side, you're leveraging your SSN for everything. But on the business side, you're leveraging your EIN for everything. But where I find most business owners stop at is they'll get their EIN and not do anything else with it. They open up a bank account and they stop. Tell us what you have seen with some of your most prominent clients and how they are using debt as an advantage, not as I would say, a heavy weight on the business. Because
Right.
I've been talking about that, but I wanted to get your perspective and opinion on that at the same time.
Right. And just to add more clarity, the EIN, okay, good. The bank doesn't want to open a business account without that EIN. Fine. Okay, we got an EIN. That was easy. Now what? Okay, what else can I do with this EIN? Oh, file a tax return. If you have employees, that's another reason why you would have an EIN to pay taxes related to that workers' comp, anything. You may need a state number as well. What else can we do? Okay, we should get a Dunn's number, right? Dun and Bradstreet. Because now, remember, we're on the personal side, Experian, Equifax, TransUnion. So who's looking
Mhm.
at the business? The business wants to be its own identity. Let's talk really briefly about entity structure. We're going to start off our business. Let's say we're going to do taxes. Hang your shingles up, get going. You're a sole proprietor. When do I need an LLC? The more risky your business is, the more likely you should get an LLC, especially if it's relatively inexpensive in your state. Add the LLC. Now, has absolutely nothing to do with taxes. It's asset protection, right? In case I mess up people's taxes and they want to sue me, They're going to leave my personal things alone, provided I'm doing the right things under the LLC, meaning I entered into contracts with the LLC. I'm not Angie Tony. I'm Toney LLC when I do everything, my domain, my website, blah, blah, blah. Contracts, everything is in that name. I'm like, and I'm not commingling. There are a lot of ways that people mess up that LLC and get no protection. You have to have your annual filings, your annual board advisor meetings, things like that. Okay, now we have this LLC. We may be starting to make good money, and now I got to do what? Elect S Corp, or ultimate graduation is a C corporation, which a lot of people fear this so-called double taxation. It's only double taxation if you declare a dividend, and that's a whole topic for a whole another session. But I'm saying this because I'm trying to talk people through the growth in a business and when the EIN is really going to be strong. Now I need to expand. I want to buy a commercial building. I want to have a fleet of vehicles. I want to do things and really separate myself. I want to be a C corporation and I need a loan. I don't want to go take my personal side and inject it into the company and always have to personally guarantee everything. So this is where your EIN, and you should start very early. Try opening up trade lines, right? And start doing revolving items and things within the company's name and the company's EIN, because that'll totally separate you. Does that make sense?
That makes sense. And one of the things that you added on where I hadn't is that it's a graduation of your LLC when you can promote it and it becomes a C corporation, I believe it is, right?
Ultimately.
Ultimately. But also because I don't want to go too far down the weeds and definitely would love to have you back. But you mentioned that it's moving from tax purposes because that's the initial reason why you go to the IRS to get your EIN number,
Mhm.
and you start moving over to having a conversation around asset protection, right? And I'll tell you, can I be honest with you if
Please
I
be.
could?
Mhm.
We didn't want to pay for that tax strategist to ensure that the roadmap that we were building was going to be that sound roadmap.
Mhm.
So we fired a lot of CPAs and we ran into a lot of brick walls
Mhm.
because we thought that we were doing something correctly and we were doing it wrong. I'll give you the perfect example. We were buying and selling real estate, right? Eunice is a tax professional, right? So we thought that because she had the qualification as a real estate professional that we were good. We could offset passive losses with active income.
Oh, yes.
But we didn't realize at that point in time is it's a and real estate professional and material participation,
Participation. Mhm.
right?
Yes.
And you aren't doing anything greater than the real estate professional as an income generating source. We had to learn that. I fired one or two CPAs when they were doing our taxes because I read a book and I knew it all. I didn't have a CPA in my circle like you who would be able to have that conversation and ensure that who could see my vision and be able to tell me the places that I needed to be in order to be able to put in place the proper structures so that once I start running and I have momentum, I don't have to run into the brick wall, stop, and rebuild it all over again.
Mhm.
So, have you seen that in certain circles? And what would be your advice to either a new startup, a new entrepreneur, or someone who is seasoned, has 5 years in business, and they're starting to get that momentum? What would be the advice that you would share with them?
Well, the first exciting thing is that the person would even seek me out because it shows me that they care and they know they don't know everything. Right. So that's one. I give them credit for that. I love, love, love that they know they need to strategize Because the only way you know, right, you were doing it yourself, you started doing things, you're still paying a lot. The more money you make, the more money you're paying the IRS. And it's like, well, that's not fair. But you remember what I said third at the top of this hour? I was saying, don't tell me no, tell me how.
Oh,
Okay. So a lot of times, okay, you read a book, but people are listening to TikTok these days. TikTok and saying, oh, S Corp is the best thing since sliced bread. Hire your children. Oh, I don't have to do this. I don't have to do that. Well, yeah. Well, if you don't understand those codes, you're going to be in more trouble than you intended, right? You were trying to minimize liability, but no one really showed you how. Leave it to the professionals. And I'll tell you, me, I hate technology. I don't want to do a website. I don't want to do my own website. I'm going to hire a professional to do my website. Guess what? Could I sell my own house for sale by owner? I could, but I don't want to. I'm going to go to the professional. And a lot of times I have professionals come and say, well, I can do my own books. I can do my own. Sure, but why? You're going to make more money doing your business than it would take that 1 hour for you to try to do your own taxes in your own books. I see it every time. And I get these notices. They get these notices start coming in from the IRS. And now it's going to cost you even more to unravel the mess you made.
Just to add on to what you just said, a couple of things came to my mind. As a business owner, I'm curious as to, let's say, the top 2 or 3 issues or risks that you find a lot of business owners getting into because we are trying to do it by ourselves, or we believe, oh, I read that I need to do it this way, we implement it that way, and we end up being in trouble with taxes because we thought we were implementing it right, and we didn't seek out a professional to really make sure that things are being done right. What are some of the things that you see so that we can hopefully help other business owners out there and make sure that they don't fall into those traps, and they know to reach out to you to avoid falling into
Yeah.
those traps?
2 things that are huge that you touched on there. Electing S Corp too early or staying in S Corp too long. I've seen this because they always hear S Corp is the best thing since sliced bread. They go ahead and they elect S Corp and they're going to pay for an extra tax return. Now they got to be on payroll. Now they got to track basis. Now they got to watch out for fringe benefit rules. They can't do this. They can't do that. There's so many rules with an S Corp that I want to strangle the S Corp if I could, right? And the second thing I see when I have husband-wife businesses, wrong entity structure. They almost always go for partnership. And when you're in a partnership in a husband-wife business, you're almost always going to overpay FICA, Social Security, and Medicare. Why? Because you can virtually hire a spouse and pay in mostly tax-free benefits. One should be the boss and one should be the employee. But sometimes if you can't get past that ego part where, nah, I got to be the owner too, then okay, be your partnership, but you're going to overpay taxes. One should be the owner of the entity and one be the employee.
Good to
Valuable
know.
information out there. Yep.
So let's switch over and start to shut this down just a little bit, Angie. And thank you for your expertise as well as your time. Right? If someone wanted to get in touch with you, right, how would they go about doing so? I put your website into the chat, but is there another faster way to get a hold of you?
Actually, ideally, the website is best. Scheduling time on my calendar, we have a complimentary strategy session, half an hour. Just chat it out. Let's see if we're a good fit because not everybody can work together, right? If we have different philosophies and anybody's calendar you get on, if you're vetting a professional, by the way, it does not have to be a CPA. Enrolled agents are licensed by the IRS to do taxes. And some are not strategists, some are not accountants. That's why you're vetting, right? Depends on what your needs are. But if you're going to go CPA route, you're going to want to ask the right questions, find out their philosophy on and their strategy. How do they think? Are they too risky for you? Are they too conservative for you? Look for ones who will be advocate for you and not the IRS. That's what you want. Hear how they speak on that. We don't need to lie, cheat, or steal. So make sure it sounds, copacetic. It got to sound like, okay, that, it's a little bit too shady for me, right? Look them up.
Mhm.
Are they registered? What state are they in? How do they train? Make sure they're taking their credits. Oh, there's OB3. Do you know about that? You may ask somebody and they'll say, huh, what's that? You don't want that CPA, right? Because you have to what? Study to show thyself approved. That's one of my favorite scriptures because I feel like we don't study enough and we don't want to learn, but you absolutely need that. So bring on the website, myoasistax.com. There's a what you call a scheduling contact us form.
Mhm.
I'm almost always chained to the desk. I'm not a texter, even though we do. Once you get into our flow, we have the SMS capability with the team. So Angie's not the only one who sees it because remember I'm 60 now and sometimes the brain. but I'm always answering emails. Like you will get to you 24 to 48 hours. There are a lot of scam artists out there. So people will say they want you to do their taxes. So I like to meet everybody. I onboard everybody and I offboard. So when we're finalizing an engagement, you're going to talk to me and you're going to know I looked at it. But you have to be able to work with the team.
Yeah.
Okay.
Mhm.
And final one from me, because I know you're also doing something called the executive touch. Can you tell us a little bit more about the executive touch and what it is, and for all of those other tax professionals, why they would want to spend a little bit of time with you?
Oh, thank you for bringing that up. So the executive touch is all about supporting, training, mentoring, coaching other tax professionals to do what I do. Because I found when I came into the industry, there are a lot of people who, guess what, not studying or they're solopreneurs, have no support. I get it. We're not all ready for a big firm yet, but then you don't need to be alone either. Tap in, plug into your comrades and peers in the profession and learn and support each other because sometimes I may see it one way but another pro may see it another way, and together we'll solve the client's problem. And again, there are way more cases than there are professionals, so we just can't do it all by ourselves, so we're better together.
So you are leading and building an army of professionals, not to mention when I first met you, we met and you were about to head out to Jamaica.
Oh yes.
And I believe that that's something that you're doing on an annual basis at the same time. So I told you I'm coming just because I want to hang out with you in JA.
You're
But
funny.
for all of those other professionals in the tax space, do you also have something for business owners who are looking to upskill themselves so that they could be aware? Because what I know right now is that the executive touch is for tax professionals. Do
Mhm.
you have something for business owners who are just trying to navigate and become more educated in the space?
Yes, we're building that out now. So we're on our third annual business retreat. So there are credits being offered on the professional side, and we do have business owners coming as well. I've noticed that it started to expand. People want to come. I'm writing a book on financial literacy, and I probably will have a presentation at this year's retreat on the book and on financial literacy for everybody. You don't even have to be a business owner, but anybody who wants to get their finances in order. I say in general, follow the YouTube page because we have trainings coming out there all the time. I have a Facebook group, a seat at the table where business owners can come and ask their questions. So there are plenty of ways to reach out and get some training from Angie Tony. We try to look out for everybody and get everybody educated. Education should be free.
Education is free, especially with the
Yeah.
internet. It's just people have to be instructed on how to use it properly,
Yeah.
because as much education is there, there's a lot of miseducation that is there as
Yeah.
well, and that could also help you to get into trouble just the same.
Right.
Yeah.
I just want to say that I am an authorized IRS CE provider. So enrolled agents do learn from me and get credits. And I'm registered with NASBA. So CPAs get credit for my live trainings, which I have all the time. So not just Jamaica, but even in our county, we can throw something together. Come on, let's go. I try to coordinate with other business owners. Let's educate.
Let's educate.
That's
Well,
wonderful. I think what's important right there, Lee, is that when you do seek out education, especially online, make sure you know who the educator is. Look them up. A lot of these credentials, you can look them up. Go in and check, is she indeed certified? Where did she, get all this from? Because there's a lot of people out there who are just TikToking their way and just telling you whatever they think that may not necessarily be true. So
Mhm.
here's Angie, well educated. She has the right credentials. If you are looking to make sure that your tax strategies are in line, that you are not going to get a $1 million bill from the IRS and you say, who can I reach out to? Try and work with her before that happens.
Yes.
yeah, an ounce of prevention is better than a pound of cure, is the way my granny used to say it. So,
Sure.
once
Mhm.
again, Angie, we're going to sign off for now, but people know how to get in contact you. We'll put that into the show notes. And we want to thank you for your time.
I appreciate you having me. Best to both of you.